Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up year to date 7.3% as of September 23rd, 2023. Here at Spy Trader Now, we take investment grade capital, not trading capital, investment grade capital, and we want to beat the returns of the S&P 500 buy and hold investor. Now that's our goal here at Spy Trader Now. We are not accomplishing our goal because the buy and hold investor is up 12.43% year to date return. We are only up 7.3% year to date. So what we do here is we do a simple portfolio of 3 positions. We buy and sell the electronically traded fund, the ETF symbol SPY, or we do SPY options, or we're in cash. This is our current allocation of where we stand right now. Here are some past returns of this strategy for Spy Trader Now. You can see we've had some really good years. Last week, the S&P 500 lost 2.92% for the week. Here are the trades we made last week. So on Tuesday, September 19th, this is Pacific Standard Time because I'm on the West Coast, we put out a trade where we were already holding 200 shares of SPY. So I wanted to sell to open 2 covered call options. We're going to sell the September 29th, 2023 expiration 4:30 strike for about $14.32. Well, 2 days later, due to the market decline of 3% or whatever it was, just under 3%, what I did was I put out another trade alert. We're going to buy to close the covered calls. We ended up buying the 2 calls for $5.16. We sold them for $14.32, so we banked that difference. Here are some of the trades I've made in 2023. If you want to see all my trades going back for the last 3 years, you can head over to spytradernow.com for the full trade list. And if you want to learn more about me, every single thing that I'll be presenting, there'll be links in the description down below. Here is that profit that we made on that trade where we sold it at $14.32, bought it back at $5.16. We made a very healthy $1,800 profit, which was very sweet last week. That was very nice. And if you want to see how I do this, you go ahead and stay tuned. Hit that subscribe button, ring that bell, and help me by smashing that like button down. Here is our equity curve year to date for our model portfolio. Slow and steady up with few downturns. Here is the equity curve for the S&P 500 buy and hold investor year to date. And here are the 2 equity curves combined. Now, personally, what our goal here is for the blue line, which is our model portfolio, to be above the pink line, the buy and hold investor. I know we are not above the buy and hold investor, but due to the decline of the S&P 500, and ours has just a very modest decline, that gap is now closing. And before the end of the year, I want to be above that pink line. Here are the interest rate hike advances made in 2022, 2023. The last announcement did not have a rate increase. Here's the Fed Chair Jerome Powell. So on November 1st, that's the next Fed announcement. Will we have a 25 basis point rate hike or a skip? Here on the September 20th announcement, we know we had a Fed skip rate hike. Now we're looking at things from the presidential election cycle theory, which states, depending upon the year of the election, the S&P 500 has historical rates of return. Currently, President Biden is in his 3rd year of his election cycle. Historically, on the S&P 500, that equates to a 16.3% return. And historically, on the QQQ, which is the NASDAQ 100, That historically equates to a 32.27% return. And both of these, well, let's look at the S&P 500. The S&P 500 year to date is now up 12.43% year to date. So we are below the historical norm for this election cycle theory. So this market could absolutely advance between now and the end of the year to meet that historical norm. Now we're looking at things from the bond market, and we want to pay attention to the bond market because it's 4 to 5 times the size of the stock market. So because of that, these are very smart investors that do this. And we have an inverted yield curve and we have rising interest rates. So because of that, the bond market is telling us to not be invested in the stock market right now because these are negative things. We need these to correct. So that's what we are waiting for. Now we are looking at a valuation of the S&P 500. And according to CMV, current market valuation, link here and in the description down below, we're overvalued by 53.6% above the modern era market average of a PE ratio of 20.2. And on a standard deviation chart, that puts us at 1.4 standard deviations right there. There is risk in this market and caution is advised. Now we are on the CNN Business Fear and Greed Index. Here's our friend Warren Buffett, the sage of Wall Street. And we have come down to fear because the market is developing fear because it's dropping. Last week we were in neutral territory at 49. This week we are at 36 on the Fear and Greed Index. Now we are looking at things from a seasonality outlook. And this is a chart going back 20 years for the S&P 500. Currently we're in the summer doldrums. These 3 months are the summer doldrums. We are in September. 1 more week of trading left. 65% probability that we're going to close higher than when we opened. Generally, these are just weak months. Currently, for the month of September, we are down 4.09% for the month. So we could still come up a little bit and still be negative for the month. So we'll see how this plays out. Now we are looking at a long-term outlook. This is going back 20 years, monthly chart for the S&P 500, and we are in a bullish stance on a long-term basis as long as we stay above this line and this line. Currently we're above both, but you can see we've clearly topped and we're heading back down towards all these moving averages. I've got them laid out right here. So the MACD on this chart is topped, coming towards its signal line. Slow stochastics has already crossed below its signal line. So we'll see how this all settles out in the next month or two. Now this is an intermediate term outlook going back 5 years, weekly candlestick chart for the S&P 500. We are in this trading range, stuck in trading range. This trading range between this line here and this line here. Now we are looking at short-term outlooks going back for only 6 months. Actually, I think this one's a little bit more than 6. I think I had to go back 8 months or so for the S&P 500 on this chart because I wanted to capture that bottom and this Fibonacci retracement that I have lined up in here. But currently, we are right there at this bottom edge right here, and you can see the trading in the last few days, how we kind of fell down. But this is where we stand right now. And I've done some trades that are in here on this chart as well. Now we're looking at a ratio chart. And on this ratio chart, we are monitoring the equally weighted S&P 500 against the normally weighted S&P 500. The ratio chart is the one that's in the black and red lines. Then the other two charts are the normally weighted S&P 500 in blue and the equally weighted S&P 500 in green. Now, normally, when the MACD drops down to these low levels, which it's only done 3 times in the last 20 years, we are very, very close to a S&P 500 bottom in the market. Then we take off. Here, after the MACD crossed above its signal line, there was still more downside, but then within the next couple of months. It bottomed and then we took off. So we are watching this, but there's a caveat to this. Both of these two times, the S&P 500, which is the blue line, the normally weighted, dropped off of a cliff here and here. Currently, the S&P 500 has not fallen off of a cliff yet. And it is unclear whether it is if it is going to fall off of a cliff. It would be healthy and a little bit more supportive if it did fall off of a cliff, because that would be towards the end of the bottom, and then we would come up and feel very confident about that rising, that new stock market, that new bull market. So we don't want to get stuck here holding the bag while we come down here. So we want to watch this. Currently, the MACD is parallel, but that has not crossed below its signal line. If it does, that would be a bearish activity that would be happening. So we are monitoring this to see what is going to happen. Now we are looking at the volatility VIX or fear index, and we are now in a new trading range. We were in this ultra low one, then we popped up above it. And I'm saying that we're near resistance because of these highs that we made here right around 18. Currently, we're at 17.2. So if indeed this is going to be a resistance mark for the VIX, then the VIX is going to come down. And if the VIX comes down, like it did from here to here, the S&P 500 from here to here, you'll see it came up. So there'll be a little bit of a bounce if indeed this is going to be a resistance level for the VIX. So we want to watch this and see if that's going to pan out. Now we are on the Thinkorswim platform, 1 year chart, and on the standard and we have standard deviations in here. +2, +1, -1, -2. Regression and the dashed green. Currently we're at the -0.8 on the 1 year chart. This is still a bullish chart. Why? Because we are traveling north from the standard deviation. So you can see we are going up. So that is a bullish for 1 year for the S&P 500. Now we're looking at the same chart, but instead of going back 1 year, it's going back 6 months. Still bullish, still heading north from the left-hand side of the chart to the right-hand side of the chart. But you can see on the standard deviations on this chart, we're at -1.5. Keep in mind, 95% of all trading takes place between the +2 and the -2. And 65 to 67% of all trading takes place between the +1 and -1. Now, the further out in time duration you go, the more reliable the chart information, because there's more data on the chart. So we are tightening up our time frames. We went from 1 year, now we're down to 6 months. Now we're going to go to 3 months. This is the 3-month chart, and on the 3-month chart, we are below the -2 standard deviation. Also, look at the trend lines. The trend lines, instead of going up from the left-hand side of the chart to the right-hand side of the chart, the standard deviation lines are now going from just about flat to slightly negative. So over 3 months, we are starting to, this market looks like it's starting to roll over. Now, we are monitoring this, but we are at the -2 standard deviation on this chart. So this potentially could be a bounce and a bottom and a buy. There's a 95% probability that it actually will be on a 3-month time frame. So we are monitoring this very closely. Now, I've given you a ton of information in this video. Now comes the critical thinking. What are you going to do with that information? This is what I am going to do, and let's see what you think about it. As of September 23rd, 2023, market summation, according to me, your host, Ken, with SPY Trader Now, the market is at the bottom of the trading range. I currently hold 200 shares of SPY with no option. If the market goes up to 440 to 450, which is that little bit of a bounce that I was telling you about, I'm going to sell 2 more in the money covered calls with a 420 strike and an expiration date of 10/13/23, which is going out to the halfway mark of October. Overall, I'm expecting weakness till the end of October and then strength till the end of December. Now that's just what I'm expecting, and just because I'm expecting something doesn't mean that the stock market is going to conform to my expectations. We have to let the market and the charts dictate exactly how we trade. So we have to watch and make our trades based off of market action. But if my fruition comes true, this is my expectation. I need a few more trading days to see how the market's going to react next week. If the market doesn't do what I think it's going to do and it begins to just sell off, I'll go ahead and sell a couple of in-the-money covered calls to protect my position and be able to make some money with the market decline. That is the benefit of doing options while you're holding shares of your, in this case, ETF, symbol SPY. So that is why I actually made some money last week on those options. So that's it. I hope you have gotten some valuable information out of this video. If you have not done so already, go ahead and hit that subscribe button, ring that bell to be notified when I post a new video, and help me promote this video by smashing that like button down. I thank you, and I wish you good trading.